Imagine this: an empire at its peak, confident, wealthy, unstoppable. Its currency is trusted, its people feel secure, and the world believes the system will last forever. But beneath the surface, something subtle begins to shift. Gold, silent, ancient, unemotional, starts rising against the currency that built the empire. And throughout history, that single movement has marked the beginning of every decline. That moment is no longer in the past. It is happening again. There is a rule woven through financial history, simple, brutal, and ignored until it's too late. When gold surges, empires fracture, and that signal is not theoretical anymore. It has already flashed. Most people will focus on the chaos that comes after, the inflation, the debt, the political breakdown. But that is not the real story. The real story is the transfer. The moment when wealth silently moves from millions of hands into a few prepared ones. Every collapse in history has done this, and every time the pattern rewards the people who understand it, and devastates the people who don't. Because hidden beneath every monetary system is the same mechanism, a mechanism designed for those who sit closest to power, and almost invisible to those who live on the receiving end of their decisions. It runs on one fuel, the erosion of your money. We were taught that money is complicated, that inflation, markets, and central banks operate through equations too complex to grasp. But that illusion protects the system. The truth is disturbingly simple. When a state cannot pay its bills, it does not stop. It creates money. And when it creates money, it dissolves the savings of every citizen who depends on it. This silent dilution is the oldest tax in the world, and the one guaranteed to topple every empire that abuses it. Across thousands of years, one asset has always revealed this moment of truth: gold. Gold does not panic. Gold does not lie. Gold simply measures the weakness of the currency used to price it. When people lose trust in the money they hold, gold becomes the world's unanimous vote of no confidence. To understand what comes next, we need to step back into the timeline, not to find predictions, but to watch a script that has been performed so many times it might as well be carved into stone. We start in Rome, where the formula first took shape. Rome's monetary backbone wasn't gold, but silver, the denarius. Introduced around 211 BC, it was nearly pure silver, respected across the empire and stable for centuries. A Roman could hold it in their palm and know exactly what it represented. And for almost 300 years, the system held, until it didn't. Governments always face the same temptation: to spend more than they earn, to promise more than they can deliver, to extend the empire further than the treasury allows. Rome chose the easy path. Slowly at first, so slowly most didn't notice, the silver content was reduced. Under Nero, barely a dent. Under Trajan, a bit more. Under Commodus, the slide accelerated. By the Ming Dynasty, the denarius was half silver, half the value, half the trust, half the wealth of the Roman people erased without a single vote or public debate. Then came the breaking point, the crisis of the 3rd century. Emperors changed faster than seasons. Wars multiplied, the treasury evaporated, and the denarius collapsed to less than 5% silver. A silver coin in name only. A thin whitewash on copper that wore off after a few trades. You cannot deceive a soldier who needs real pay. You cannot fool a farmer trying to feed a family. Gold became the only form of payment anyone trusted, and prices across the empire surged beyond comprehension. Gold didn't multiply. The currency died. And as the rule predicts, political chaos followed monetary chaos. Rome fractured, rebelled, and eventually fell under the weight of its own diluted money. But Rome was only Act 1. The next empire to test the blueprint was Spain. The 1500 Spanish Empire possessed more silver than any civilization in history. The treasure fleets hauled mountains of bullion from the New World. Spain believed it had discovered the ultimate economic shortcut. Why build when you can buy? But wealth doesn't come from metal. It comes from production, and when a nation floods the world with money, whether silver or paper, the price of everything rises. Food, rent, wages. By the late 1500s, Spain entered the price revolution, a century-long inflation storm that hollowed out its middle class. Despite endless silver, Spain still borrowed, still waged wars, still spent beyond its means. And when creditors demanded repayment, Spain defaulted again, and again, and again. When the silver wasn't enough, Spain resorted to debasing its domestic coins, issuing copper money and declaring it equal to precious metal. But people knew the truth. Silver and gold doubled in value against the new currency, and those holding real assets survived. Those holding promises and wages did not. As the rule foretold, Spain's dominance collapsed. The Dutch and British rose. The empire with the most treasure in the world went bankrupt. Then came China, and the boldest monetary experiment of its age. In the 14th century, the Ming Dynasty attempted something revolutionary. They replaced precious metal with paper, fiat currency centuries before the West would attempt it. At first it seemed visionary. But like Rome and Spain, the temptation was the same: print more. With no metal backing, trust evaporated. Hyperinflation devoured the currency. The notes lost more than 99% of their value. Eventually, people rejected them outright, and silver returned as the only trusted money. But when global silver flows dried up, the economy suffocated. Taxes demanded in silver-crushed peasants paid in copper. Famine and rebellion ignited. In 1644, the dynasty fell. Once again, debasement, doubling, collapse. Then history repeated in Britain. By the mid-1900s, the British pound was the world's reserve currency. London was the center of global finance. But war, expensive, endless war, rotted the monetary foundation. After 2 world wars and years of inflation, Britain finally surrendered to the truth in 1949. The pound was devalued by more than 30% overnight. Gold surged in pound terms, and the world understood. The British Empire was finished. The reserve crown passed to the United States, and now we reach the chapter we are living inside. The Bretton Woods system of 1944 promised the world that dollars were as good as gold. But by the 1960s, the U.S. was spending far more than its gold reserves could support. On war, on social programs, on global influence. Foreign nations saw the blueprint before Washington admitted it. They returned their dollars and demanded real gold. The vaults drained, and in 1971 the United States broke the final link, ending gold convertibility and transforming the dollar into pure fiat. What happened next was predictable. Gold doubled, then doubled again, then doubled again. The signal had been given, the currency had broken, the countdown had begun. For the first time in history, every currency on earth became backed by nothing but government promises, and most of those governments owe more than they can ever repay. Today, after decades of debt, crises, and global instability, the pattern is back. People feel the dilution. They know something is wrong. And right on cue, a new escape appears. Digital money offered as salvation. But digital wealth depends on digital systems, grids, networks, exchanges, structures that can be restricted, monitored, or disconnected in hours. Digital assets can rise spectacularly, but they can also be frozen, taxed, or blocked with a single regulation. And that is why the oldest institutions in the world, central banks, sovereign wealth funds, powerful families, are not accumulating code. They are accumulating metal, tons and tons of it, repatriated, vaulted, guarded. They are not guessing, they are preparing, because through every collapse, Rome's denarius, Spain's vellon, Ming paper, Britain's pound, the survivors were always the same people, those who held real value, gold, silver, land, tangible assets that cannot be printed, hacked, or deleted. This moment is not about chasing the next trend. It is about understanding a pattern older than any modern economy. a pattern already in motion. Gold has doubled. The signal has flashed. The blueprint is active. The only question left is the one history always asks. When the currency breaks, will you be among those who are protected? Or among those left holding promises that no longer mean anything?